you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and here with me today is Sarah Whitley, manager of the Baillie Gifford Japan Trust. Hello Sarah.
Hello Emma.
So there have been a number of changes in both private and public sector in Japan, largely due to Abenomics, and one of the sort of arrows impacts has been on corporate governance within companies, and it's something that's made you quite excited on the prospect of the stock market, hasn't it?
Yes, because we believe that the changes in corporate governance are a sort of sea change in the whole way that companies think about themselves, how they should be governed, who the important stakeholders are, and shareholders are definitely moving up the list. And if they're not at the top, they're very nearly at the top. And as a result, we're expecting improved returns from companies as they apply more discipline and improved dividends.
And that's quite an exciting thing, improved dividends, for any shareholder, because total return is such an important part of how you get gains.
Yes, and dividends historically haven't been important in Japan, but the stock market yields a lot more than the bond market. People can borrow at very little cost in Japan, and I think Japan, because it's a nation of typically older savers, does need income, and that can be generated by companies focusing more on paying out dividends.
And which companies is this really affecting? Because we'd expect some of the larger, more global stocks to already be applying this corporate governance. Perhaps is it the medium and smaller companies that will need to pull up their socks?
I think it's there are two types of companies that it will affect. One are the cash hoarders. So there's quite a few companies in Japan that have hoarded significant amounts of cash. Nintendo, for example, has over 1 trillion yen in cash on its balance sheet. And they are being strongly encouraged to utilise that cash, so that should help improve returns. And the other ones are companies which have never really earned a decent return, and I think management will feel that their jobs may be at risk if they have failed to improve returns. So it should be helpful, not really size of company, but quality of company.
I know one of the other things that you think or you predict will drive the stock market is sort of contrarian to a number of people's view, because the demographics of Japan don't seem to be supportive of growth. You have a very ageing population, fewer people entering the workforce to support those dependents. But you think actually this can be an opportunity for some companies in order to improve productivity.
Yes, Japan now has a labour shortage. Unemployment levels are low. We've seen increasing female participation in the workforce in the last couple of years, and there's plenty of scope for that to continue to rise. And we think the fact that people can't just go and do a traditional Japanese thing, which is hire hordes of people to sort out a problem, will make them more efficient. We also hope that eventually companies will look at lower quality bits of their business and may decide that they need the people in the core business, and they should get rid of businesses that they diversified into in previous years. Because
it's a fact that I didn't know until recently visiting Tokyo, that a number of these large companies have so many strings to their bow. They have banks, they might make chips, they might do automation, they might do things for your home, and not all of those. You can be a jack of all trade, master of none if you take that approach.
Yes, I think that's true with the very big companies. They could all focus a lot more and improve their returns. So yes, it should be quite exciting times in the next couple of years.
Sarah, thank you very much.
Thank you, Emma.
This is Emma Wall from Morningstar. Thank you for watching.